flag the importance of sustainability disclosure for corporates, particularly for ASEAN countries. ASEAN countries. Um, first of all, maybe as you may know, the rule of IFRS is to work together with our sister body IASB to provide corporate reporting standards, including accounting standards and the sustainability disclosure standards to enhance the transparency and the vision of global capital market. That's to see we are providing standards to support general purpose financial report to satisfy the information needs of investors, or we can call that primary users of JPFR, general purpose financial report, in their decision making related to providing resources to companies. That means quite a lot, because actually we are part of a huge ecosystem. We are relatively small as a disclosure standards setter, but we are working with lots of stakeholders, including certain authorities who is establishing mandatory filing requirements to not only financial standards, but also to not only to financial statements, but also to sustainability related information. And we're working with practitioners, with assurance or auditing standard setters. We work with you guys, with market participants and investors to form a robust funding mechanism or funding channel between the companies, particularly the large ones with public accountability, like listed companies, and the investors. From the investors, from the companies to investors, data will be provided in a robust way and in an understandable way and a robust way. And from the investor side, the money will be provided to companies in accordance with their performance on sustainability related issues. That's where we are, and that's who we are, and that's what we are working on. And the next, I would say, one is very important for companies to get involved in this process. What I mean is not only voluntary application or mandatory adoption as required by your jurisdictional regulator or public policy makers, but also a more active, positive, or proactive engagement in our standard setting. And that's another reason why we're here today, because thanks to the protocol signed in last year, we got a great opportunity to listen to your voices, to voices from emerging markets, particularly from ASEAN countries, from this region, which is so important in the global supply chain and in sustainable development. And we are so delighted to see there's some great progress in potential adoption of IWS standards in ASEAN countries, like that's happened in Malaysia, Singapore, and will happen in hopefully in other jurisdictions in this region like Thailand and Indonesia. It's very encouraging to us, and so we need to listen to more of your voices to get more positive engagement when we are setting our standards. And recently, as you may noted, at the end of this May, we announced a jurisdictional guide. You can call that jurisdictional guide or adoption guide. And at the same time, we from our website, you may find it's very clear the inaugural cohort using adopting IWP standards or other using IWP standards up to 25, representing around 50 or 55% of global GDP, and around 75% of global capitalization if we exclude United States capital market. And so it's a very rapid progress, and also we are still working on how to line our jurisdictional guide to help jurisdictions, global investors, to get more transparency on to understand is the status of a specific jurisdiction in their journey have been started towards fully adoption of IWS standards. For companies, if I may, I'd like to, very, very faithfully, I like to, just like what I talked to domestic stakeholders in mainland China, um, don't uh, don't chase perfect. Just just do it. Just start your journey to use IWB standards as soon as possible, not for others, but firstly for yourselves. You don't want to do quite a lot in so-called ESG reporting, but at the same time, you need to pay lots of money, spend lots of your resources on to explore and further understand the philosophy of ESG rating agencies, which is not so transparent because that's their own assets, and it's not so robust. Because don't abandon your right to speak loudly to everybody, particularly to investors, how good you are in sustainability. Tell the story in accordance with the general accepted standards like the global baseline of sustainability related disclosure, that is IFRS standards, to tell your story to your investors and to get their support in your valuation, and to get more to get less cost funds, to get more channels towards accessibility towards funding, financing, and to get more where you're stronger financial position, to get more powerful position to talk with your upstream and downstream and bring out together in your value chain towards a more sustainable future. That's I'd like to bring here today. Thank you so much, everybody. Thank you for your time being with us. Thank you.
Thank you, Mr. Bingling, for your encouraging remarks. Our first sessions will provide a recap on the ISSB standards and an overview of IFRS S1 and IFRS S2. I now invite representative from ISSB team to present on this topic. Please welcome.
Good afternoon. Our apologies, took us a little while to get us settled. We did have an interesting session yesterday at the international conference, and I think Yuling Fang made a really nice analogy around capacity building being a bit like developing muscle. Bing, when I heard you say, just do it, which is, I think, the Nike slogan, I thought you would put us all to run again today. But anyway, it is a pleasure to be here today. And again, in that exercise of building capabilities, competence, we wanted to run through initially what are our first inaugural standards, IFRS S1 and IFRS S2. No need to introduce ourselves, Bing. Thank you for the introduction. But again, just wanted to give you perhaps a bit of an overview before we delve into the details of S1 and S2. So you all certainly know, that's why you're here today, you want to become a bit more proficient on S1 and S2. They were issued, I think, in June 2023. So they are a year and a couple of months old. But again, just wanted to make some opening remarks before getting into that. So just as a reminder, IFRS S1 and S2 ISSB standards, if I may, require disclosure of information that's material to investors and capital markets. The ISSB undertook an effort to try to consolidate a number of pre-existing initiatives in ISSB standards. So SASB standards are there, the integrated reporting has been also brought together with the CDSB, and of course, the TCFD recommendations are a bit of the backbone of S1 and IFRS S2. And again, after the FSB disbanded the TCFD, we will take forward the work of the TCFD going forward. Importantly, it requires cross-industry as well as industry-specific information. And we'll have a session later on talking about the value of industry-specific information and how companies can rely on SASB standards in order to produce information that's suitable to meet the needs of IFRS S1 in order to implement IFRS S1 properly. So we move to the next one. And again, just as a recap, you've probably had the chance to go through our standards. For those of you that maybe don't want to get into the entire literature of S1 and S2, there's a project summary that will give a good overview. But I would encourage those of you that are actually asking yourselves how to put in practice disclosures in accordance with S1 and S2 to delve into the different materials that have been made available that underpin S1 and S2. Those include, of course, the application guidance, as well as the accompanying guidance, which are in the standards, but as well the basis for conclusions. What is the rationale that the board applied in order to determine why some requirements should remain in S1 and S2? And of course, that also builds into the feedback statement, giving information as to what is the rationale behind some of the requirements in the standards. And again, only S1 and S2 are authoritative, but the surrounding materials are an important starting point to understand how ISSB standards do operate. So we encourage you to start with that. We can move to the next one. We hear very often, well, ISSB standards have been really designed for the large companies. It's very difficult for smaller companies to implement those. And again, just wanted to note that the decisions on which are the companies that will be subject to requirements aligned with ISSB standards really rests with the jurisdictions as part of the inaugural jurisdictional guide. We have tried to provide some guidance as to how jurisdictions can actually scale requirements in a way that is proportionate, in a way that meets the need of the respective markets. But I think the good news is that regardless of the decisions that jurisdictions take, there is proportionality already built into S1 and S2. There are elements around how to rely on information that's available, reasonably available, without incurring an undue cost and effort. It's a permanent structural proportionality relief, as well as the ability for companies to perhaps that may not have the skills and the resources to be able to gravitate towards qualitative disclosures. So there are mechanisms in there that can help navigating through the ecosystem. One way or another, what it's sure is that perhaps the smaller companies, even if they're not required to produce sustainability-related information on a corporate-wide basis, they will somehow need to provide information through their involvement in global supply and value chains. And I think, it's also relevant to look into the opportunities. This may provide an opportunity for smaller companies to enhance their ability to trade in a context where larger companies operating across borders will be requiring information from their value chain in accordance with ISSB standards. And with that, let's perhaps move into S1. Yaling, turn to you.
Thank you, Jonathan. So now I will go take everyone to go through the IFRS S1. So IFRS S1 really is our foundational standard, which sets out the overarching requirements for a company to disclose information about its sustainability-related risks and opportunities that is useful to investors in making investment decisions, whether they wanted to allocate resources to the entities or not. So if you look at the contents of the IFRS S1, there are 6 sections. The first one is the overall objective of the standard, and followed by the scope of the standard and the ISSB standards at large. and the conceptual functions of sustainability-related financial information, which will include the requirements on materiality assessments and connected information, which are the very important features of IFRS S1. And the fourth part is the core content disclosure requirements relating to governance, strategy, risk management, and metrics and targets that is aligned with TCFD. I'm sure a lot of companies are already really familiar with this reporting structure. And then general requirements, including location of disclosures, timing of reporting, and the statements of compliance. And the last requirement is set up is around requirements relating to judgments, uncertainties, and errors, with IFRS 1 asking companies to really think about information to help investors understand the significant judgment it has made in preparing its own sustainability-related financial disclosures. Disclose information about most significant uncertainties that affect the amounts reported in its sustainability financial disclosures, and retate some comparative information relating to previous report errors unless it is impractical to do so. So really, IFRS standards of sustainability disclosure is trying to provide an opportunity for companies to speak, to communicate with the global investors in the setup format. Next slide, please. So we look into objectives. To repeat that, IFRS S1 sets out the overarching requirement for a company to disclose information about its sustainability-related risks and opportunities to meet the information needs of investors. So when we talk about this kind of risks and opportunities, we are not talking about like universal each and every risk and opportunity that entity might encounter by, for example, climate-related risks. But we are talking about especially those risks and opportunities that investors will be interested in that might change their decisions. So that could reasonably be expected also to affect a company's cash flow, its access to finance or cost of capital over the short term, medium term, and long term. So the opportunity that could reasonably be expected to affect companies' prospects. So I think this is a really important concept of S1, which helps a company really to narrow down to that specific subset of the information where you don't need to explore every kind of risk, but only those, especially in relation to your industry, that might affect investors' decision. So it is important to be clear when you make this kind of reporting that why sustainability-related information matters to investors. So IFRS S1 also explains that information about sustainability-related risks and opportunities is useful for investors because a company's ability to generate cash flows and over the short term, medium term, and long term is very much linked to the interactions between companies and its stakeholders, the societies, the economy, and the nature environment throughout the whole company's operation, through whole company's value chain. So in S1, we also discussed how a company and the resources and the relationships throughout its value chain form interdependent systems in which the company operates. So that is where we bring, afterwards scope 3 disclosure. And when we look at the value chain related informations, that's in relation to what Jonathan said about the SMEs as well. So, so the next slide is about conceptual functions that you can see there are 4 elements under this pillar. So one important function of S1 is to set out parameters for the type of information that needs to be provided in order to be decision useful for investors. Specifically, the fair presentation requirements in IFRS S1, which is actually consistent with our sister board IFRS accounting standard or standards, require a company really to disclose relevant information about its sustainability related risks and opportunities, and to faithfully represent, for example, provide a complete, neutral, and accurate depiction of those risks and opportunities. So this principle is really useful when you enter to the specific sustainability risks and the topics, and the people often ask what kind of data I should be using, what kind of information I should be putting, because we are not going to tell everyone how do you disclose each information, but then based on this setup, this principle, then you will be able to make a fair judgment about what kind of information need to be included in your reporting. So the next one is actually really important concept is the materiality. So as covered previously, a company will need to identify the information on which to provide information on those sustainability related risks and opportunities that could reasonably be expected to affect entities' prospects. So the information provided by a company on those risks and opportunities is that which meets the decision-making needs of investors. So specifically in S1, we require the disclosure of material information about each sustainability-related risks and opportunity that could reasonably be expected to affect that prospect. Then we do not provide a threshold of each material information, but the information should be really so important to the investors that if omitted, misstated, or obscured by other information, it could reasonably be expected to influence investors' decision. So one thing is that for anyone that has used the IFRS accounting standards, this material concept will help you benefit you from understanding what this notion of materiality means. It is focused on investor needs, and it is focused on the future of reasonably be expected to influence decisions. So it comes with a lot of knowledge and application and practice. And the second benefit of using this term is that it means we have a really good connection with the financial statements, because this is the same filter that is used to determine the content of financial statements. Next slide is we're talking about connected information. So the concept of connected information is another really important concept underpinning IFRS S1. We want the report that is provided using the ISSB standards to be a package of information that is a really good basis for communication. And one of the things that helps with that communication is that making sure there are clear connections between information. So, for example, IFRS S1 asks for information that enables investors to understand different types of connections between between different sustainability related risks and opportunities, connections and information about particular sustainability related risk and opportunity, and how are you governing that risk, and what is your strategy to address that governing, and what are your metrics and targets to be informed by the strategy you set, what kind of matrix, for example, you are going to set for the risks and opportunities. So the other connection, for example, is very important, is the connection between the information in the sustainability disclosure that we ask for and the information that is provided in the connected financial statement, as part of the general purpose financial reporting package. This is a really important role of ISSB to make sure that the investors can understand the package of information that a company provides. We make these connections by requiring that the same reporting entity provides the financial statements and the associated financial disclosures on sustainability. So if it is a consolidated set of financial statements, it is a consolidated entity that reports on sustainability-related risks. We ask for the information that could be provided at the same time as the financial statements. And we ask that whether possible, based on the accounting requirement that the company is applying, consistent data assumptions are used in the sustainability-related information and the financial statements, because too often the investors say that they don't understand how a company can be saying one thing about this sustainability, and then when you pick up financial statements, there seems to be a disconnect. So we mentioned about the core content about TCFD recommendations as a architecture that we are using. So 4 components of each component of the TCFD requirements actually also interlinked. For example, the governance is the foundation, and which will help to have like a robust strategy, which informs the setting the target, and also then the matrix will be reviewed and reporting back to the governance, so that it should be all interconnected to create like long-term value on the inform the risks and opportunities. Next slide, please. So IFRS S1 requires a company to identify how sustainability related risks and the opportunities have affected its financial position, financial performance, and the cash flows for the reporting period. For example, a company might disclose how an asset impairment was affected by its strategy or managing a risk. Or the company could identify how an investment in new technologies reflected in the statement of financial position is related to its strategy to pursue a sustainability-related opportunity. So a company is also required to explain the anticipated effects of sustainability-related risks and opportunity on the company's financial position, performance, and the cash flows over short-term, medium-term, and long-term. So a company required to disclose under this requirement, the company is required to disclose both quantitative and qualitative information. IFRS S1, like S2, sets out criteria for when qualitative information only is required, as what Jonathan actually mentioned about the proportionality mechanism that we introduced to support some company which is currently lack of capabilities. Okay, next slide, please. So we look at the general requirements that we mentioned earlier. There are basically like 5 areas that you can find in S1. So, last one. Yeah. Yeah, first one is about the guidance for developing sustainability-related disclosures. Okay, so maybe okay, yeah. Yeah, so this one, so I was going to, because the slide got a little bit different here. Yeah. Oh, yeah, this one, actually. Yeah, it is this one. Last one. Yeah, sorry. Yeah, so we asked the company to provide material information to all sustainability-related risks and opportunities. And you notice that we only actually published the one specific like guidance on climate-related risks and opportunities. But what about other topics? So in IFRS S1, we actually set out some sets of guidance that companies can refer to when you are going to talk about the topics beyond the climate. So we, in S1, we said that company, the consideration must go to the SASB standards that we will further introduce later. And in addition, on environment related information, you can refer to CDSB framework application guidance. And also when you refer to the matrix, when you have identified the topics, risks and opportunities, then when you go to the material information, now what you are going to disclose under that risk, then we said you shall consider, refer to and consider SASB standards on matrix and information, or to CDSB on environment related information. So that is set up in S1. That is why we said S1 is like a foundational like guidance for standards for companies. Next slide, please. So as John mentioned, together within the S1, you can see S1 is actually only a few pages in the main content, but afterwards they have tag along with application guidance. And the application guidance sets out in an appendix to S1, and this one is mandatory, has the same mandate as IFRS S1, and must be followed when you apply the standard. So this guidance provides some extra detail on key aspects of the application of our standards. And in contrast, the accompanying guidance, which we call it illustrative guidance, is included as a background material. It's not mandatory information, but you don't have to do it. But it is going to be useful for providing the further illustrative like examples or guidance. And also we actually published a lot of educational materials, and we have a knowledge hub available on our website, and we really encourage companies to go visit, and I'm sure you are able to find the useful informations there. So last things is last slide is to recap what we talked about S1. So when you are going to prepare your sustainability related financial disclosures, so first you can think about whether relevant information about sustainability related risks and opportunities that could reasonably be expected to affect entities' prospect. So what are the risks and opportunities in relation to your company specifically? And does it faithfully represent what you are seeking to represent in your disclosures? And does the information provided allow for comparability, whether that is address the industry specific requirements, and is it timely and is it understandable? And second, like you can think about the information provided, whether that will allow investors to understand the connections between the various different risks and opportunities in relation to your company, and whether the connections has been made clear within the financial disclosure, such as the core content of disclosures on governance, strategy, risk management, and the matrix
คุ้มครองความเสี่ยงการคุ้มครองบริหารภายในการจัดวางเป้าหมายของการพัฒนาองค์กรอย่างต่างๆซึ่งรวมไปถึงการรายงานทางการเงินทางบัญชี
the report in the same period and at the same time and as the same reporting entity as the related financial statements. So whether you covered all material information that you think your investors will be interested and might affect their decision on whether they wanted to allocate the resource going forward. And lastly, for example, whether comparative information has been provided. So these are all the things that actually, to recap, were really the core contents of what included in S1. Then with this basis, then you can look into, so we put into the different specific content on top of all this structure, then that leads to what Jonathan is going to take you to go through the climate-related disclosure, which is our S2. Yeah, so before that, any questions? Please, do you have a...
Okay. Hello. I have one question about the definition of material. Because here is from the point of view of investor. But there's also the definition of from the point of view of the partners, of the shareholders, of the regulators, and also of the value chain, also the vendors. So what is really the definition from the point of view of IFRS about the material information here?
So you're asking about the definition of the materiality. So the materiality definition in our standards actually is the same as it's defined in IFRS accounting standards. That is that if the information you think if omitting or misstating or obscuring will reasonably be expected to affect investors' decision. So basically, from the entity's point of view, you need to use your judgment to think about what kind of information that is very important that could make your investors to think whether this company is under the risk or whether there's going to be the transition risk in this part of your value chain, and where is this risk going to be allocated in the short term, medium term, and the long term. And also whether there's any opportunities that if I kept on investing, that risk can turn into the opportunities. So that is the kind of information that might affect investors' decision. Then that is something material. We do not set a threshold, like I mentioned, that on each company, because each company's situation is very different. So it's so that is where the company needs to use your own judgment and based on your own circumstances and also the environment you are operating in to make the decision on to identify what information is material to you. But like I said, it's not like exploring all the risks and opportunities. It's only to those that you think is important for the decision of the investors.
I can add just quickly to that. At the end, what is information investors are looking for? It's really information about sustainability risks and opportunities that enable them to be able to assess and price, what's really those risks and opportunities in a way that underpins the decision whether to invest or disinvest in that company. So that's actually the approach, which again builds from the definition in IFRS accounting standards.
I just want to extend this question in terms of from regulatory point of view, because we have the taxation and about the fair value and about the incentives for these companies. So this report also have the information disclosed to the regulators. And so from this investor point of view it's whether it's okay, whether it's in line with the test of the investment, whether it is profitable, whether the cost is low enough. But for the regulatory point of view, that do you think that the definition of the material is we need to have guidelines from the national at the national level to extend this one so that we have more information not only for investors but also for regulators, or just limit there because from the point of view only from the point of view of investor?
Yeah, well, thank you very much. We are cognizant that I think generally stakeholders expect us to elaborate a bit further, and I think we're working on an educational material precisely articulated in further detail how the ISSB understands the concept of material information and how we can support companies navigate through their own considerations with respect to what material information is. So stay tuned. That's a piece that I'm hoping it will come out very soon. So I hope that will support not only companies, but as well regulators as you determine what is a suitable framework to put in place in your jurisdiction.
Is this working? Okay. Hey, Pranav from PepsiCo. Thank you for the presentation. I wanted to ask a question about the proportionality mechanisms for smaller companies. PepsiCo has a lot of many small companies in our value chain. So if they apply the proportionality mechanism, to varying degrees of size, how would that affect the data quality and comparability of the reports that we will be mandated to report in different jurisdictions? And second part of that question, for smaller companies that are not captured in the regulation, have you seen any examples of how regulations are incentivizing them to actually produce a report or to, invest in the capacity building to do so? Thank you.
Thank you so much. It's not the first time for me to hear concerns from Mexico about SMEs, the applicability of IFRS standards. Because actually, I don't think the IFRS have discussed the applicability of our standards or any local version of our global standard, global baseline, our standards in any jurisdiction, whether it's applicable to real SMEs. I don't think we really discussed this. And the proportionality measures provided within our standards is not really designed for SMEs. Because if you check the jurisdictional guide, you may find we are considering more when we describe the status of adoption IFRS standards in a specific jurisdiction, we pay more attention to PAEs, public accountability entities. And why? But that doesn't mean we leave SMEs behind us, because from both emission amounts, carbon emission amounts, or the importance of SMEs played in every economy, we will never do that. In this design, in the current design, actually the consideration for SMEs is more blinded with what we call the scope 3, because SMEs performance can be reviewed separately by themselves via a reporting activity without adequate regulation, as you mentioned just now, and with very huge cost by SMEs and undue cost and undue reporting burden or compliance risks. And or another way to be collected, the data to be collected by the co-reporting entity in the value chain and reported to the public, particularly investors, as a part of their scope 3. So that's why we are so focused on scope 3. When we line our standards in different jurisdictions, we fully understand the challenges, difficulty of that, but scope 3 integral part of that. And why we ask for not only you need to publish your scope 3 for commercial banks, insurance companies, and asset management industry, you must publish your scope 3, at least the main body of your scope 3 in these 3 industries in accordance with the metrics we provided mandatorily in a part of S2's AG. So I'd like to catch up with you offline further in detail. Thank you.
One other point, if I may, the concept of proportionality is not stuck in time. Again, whether companies will be able to have access to information or whether they will develop the skills and capabilities is something that we expect to evolve and improve over time. First year of information, you may be right. The information may be perhaps not optimal. On year 2, we're expecting companies to have developed a bit more their skills, their resources, their competences to gather data. They may be sources of information that are available. So again, we see this as a journey whereby gradually the system will come up to speed, and eventually through the value chain, through the different considerations that ultimately result in consolidated information, you will be able to gather better information to be part of your own report as part of a parent company. So again, those are not static concepts. we expect proportionality also to be interpreted, be understood in the context of how things progress and evolve over time. Any other questions in the room?
A very short comment, if I may, very short. Yeah, Jialing introduced very good on what we are asking for in IFRS 1. Actually, if we summarize that in one sentence, we are asking for all information material to investors. And you may notice that we use wording like could reasonably be expected to affect twice. Scenario 1, we use that to could reasonably be to affect the prospects of the entity, reporting entity. Could reasonably be expected to affect the decision made by investors. That's different. We are asking for 2 steps. The first one is actually we are asking for you need to identify risks. Not all sustainability risks are relevant, but unfortunately we didn't use relevant or significant or material. But in some standards, they use material here to describe the risks and the opportunities. But we use this term only to define what information you need to do. That's the step 2. When you identify risks, then you need to identify what information is material to investors, could reasonably affect their decisions, and about the risks identified. That's all theoretically all S1 asking for.
One additional point which may be relevant. Again, this concept's built on concepts that have already been applied in financial reporting. So to a certain extent, it's not absolutely new in sustainability. And we expect the same process as in financial reporting, that eventually information, may be consolidated from different subsidiaries. And, when a new standard is being introduced, there are always elements around sometimes proportionality. So we expect that also to play out in the sense that, people get acquainted, I think, with the standards. We see that every time there's a bit of a learning curve when a new standard is being applied. And we hope that eventually, that's at least our intention, that information will be elevated up to the level of the parent company. So if there are no other questions, should we then move to IFRS S2? Oh, there we are. So IFRS S2, it's our climate-related standard. We were talking S1, which is, again, the general requirements, the conceptual foundations. IFRS S2 is our standard articulating what are the climate-related risks and how they should be reported. And again, going back to that concept of what is material, what are investors expecting to see from climate-related risks and opportunities from a company. They are looking forward to be able to determine how the effects of climate-related risks impact companies' performance and prospects. I think information should be such that enables investors to understand what's really the company's strategy, what's really their response to climate-related risks and opportunities, and whether there are any transition elements that are important that can determine how investors may actually consider the company's business model. Again, investors are interested to evaluate how the company is ready, prepared to adapt its business model and its operations to the climate-related risks, and again, understand the climate-related risks and opportunities throughout the company's value chain. We can move to the next one. There is perhaps a misunderstanding that if companies want to report only on climate-related risks and opportunities, it's fine if I just apply IFRS S2. That is not really the case. As we were, just reviewing before, there are elements that are core, key foundational aspects in ISSB's reporting architecture that are housed in IFRS S1. So IFRS S2, even for companies that may just be willing to report on climate-related risks and opportunities that may have been required to report only on climate-related risks and opportunities, the climate-first approach, they need to apply the concepts in IFRS S1. As we've been going before, the concept of materiality is embedded there. Elements such as the reporting entity, the entity boundary, timing, location, all of that is housed in IFRS S1. So again, S2 needs to be applied in combination together with IFRS S1. And we can move to the next slide, and we will go through some of the aspects, but of course, there are elements around strategy. There are elements that are more perhaps data-driven matrix and targets. If we can move to the next slide, again, IFRS S1 is actually about enabling investors to understand the effect of climate on a company strategy and decision making. So this has to do with how the company is equipped, how the company is structured, how the company is governed to respond to climate-related risks and opportunities, how they're putting resources in order to achieve those responses and plans to emerging materialized climate-related risks and opportunities, and how the company sets targets in light of those risks and opportunities, and how they are progressing against the targets they may have set. Again, IFRS S2 doesn't require companies to set targets or transition plans, but if the company has done so in order to manage climate-related risks and opportunities, those targets and transition plans will be relevant for investors to understand the company's resilience. If we can move forward, and I think, Eliane, you've covered very much current and anticipated financial effects. So this, again, it would be trying to bring to the disclosures what are the effects of climate-related risks and opportunities on the company's performance, financial position, and cash flows. I think we can move to the next slide. Looking into resilience again, an element there is the application scenario analysis. And I wanted to focus particularly on the fact that the ISSB standards, IFRS S2, builds from the commensurate approach that was already featured in TCFD recommendations. So companies are able to identify in which stage they are in their reporting journey, whether at the early stages of the cycle, they're just beginning, or whether they have actually developed expertise in designing scenario analysis. So the approach helps navigate in a robust manner towards, from the bottom up to a degree of information that may be more sophisticated. Again, one key of function in IFRS S2, it's the disclosure of GHG emissions, and you will be aware that IFRS S2 requires the disclosure of scope 1, 2, and 3 of GHG emissions, and again, using the GHG protocol for the measurement method for doing that. So again, just to summarize, scope 1 really relates to direct emissions, scope 2, indirect emissions from the generation of purchased energy consumed by the company, and scope 3, other indirect emissions that occur through the company value chain. So Bing was already touching on all of that already when making his remarks about scope 3. So what are the scope 3 GHG emission categories looking into the GHG protocol? I'm not planning to get into the detail of all of that, just flagging 15 different categories, again, up and downstream. Again, a particular category, number 15, particularly relevant for financial institutions. We heard already in the course of the weeks we've been here that there are already requirements in a number of jurisdictions demanding information from corporates on some of the categories that are already spelled out in the GHG protocol. So I think, for instance, business travel, employee commuting, those are requirements that are already in place. So when we look into scope GHG emissions, let's bear in mind that there is already information that's being provided currently in accordance with the GHG protocol. Again, financed emissions, I mentioned this particularly, so particularly relevant category 15 for asset manager, commercial banks and insurance companies. And wanted to perhaps reflect again on some of the transition reliefs that are embedded in IFRS S2. So there is an inbuilt transition relief 1 year for the application of Scope 3, for the disclosure of Scope 3 GHG emissions on the first year. Again, there is a relief allowing companies to include information from companies in the value chain with a different reporting cycle. And again, I do believe that this may be something that has been covered in some of the TAG materials as well. So there's information available out there already. And there's a paper with staff recommendations on how to deal with this. And again, just probably particularly relevant for those areas where there's perhaps an increased level of uncertainty, the proportionality relief to use reasonable supportable information that's available at the reporting period without undue cost and effort. It's again a relief that's applicable in the context of Scope 3. And perhaps looking more into the measurement framework. So again, our standards do again prioritize that company use direct measurement where possible, but if prioritized, if not available, I think there is estimation that's already available, particularly here on activity data and emission factors. So companies may be able to estimate information. They may not be able to have direct measurement of all of that, and they can rely on estimates. Similarly, when it comes to data, companies should prioritize the use of primary data. But again, when this is not available, estimated information can be used. We expect, in terms of the scope, the level of detail, the level of granularity, that companies will evolve over time. And of course, whereas there's a preference for more granular and specific data, I think as a starting point, we'll likely see less granular data, perhaps in the beginning of the reporting life, and that will be enhanced over time. With respect to the level of verification, again, we do understand that reliability, high quality information would require verified data. That may not be possible in all instances. So we are again allowing through the measurement framework to rely on non-verified data at some point. We will be covering, I think, industry-specific requirements on a different session, but just to specify that if IFRS S1 referred to SASB standards, in IFRS S2, the industry-based guidance is a component of all of that. Industry-based guidance has been inspired to a certain extent by SASB standards, but it's a specific piece that's inherent to IFRS S2. And again, the reasons it's because it's really relevant to inform investors at the climate level on information on an industry by industry basis. I mentioned before in terms of targets, again, we don't impose companies to have targets. There may be regulatory requirements mandating that companies set certain targets. There may be regulatory requirements that impose companies having to set transition plans. That is not a requirement in IFRS S2. However, if either by regulation or because the company voluntarily decides to set targets, if it decides to have transition plan, that is information that is very likely going to be material for investors. Let's move perhaps in the interest of time into the presentation on the transition implementation group, because one of the forums that we have put together in order to support companies navigate through their implementation questions is this transition implementation group. I think particularly the last meeting in September, Bing, you were probably there. There was an important discussion around elements surrounding, particularly IFRS 2, elements around the greenhouse gas protocol, elements around provisions on scope 3. Not sure whether you want to add something in that respect.
Yes, thank you very much, Jonathan. Actually, TAGA is a very useful external advisory body to the ISSB in the implementation of S1 and S2. As you noted, as shown by Jonathan's slide, you can see we can see seven representatives from companies. Actually, most of them are large companies, and they will be in tier 1, they will be in tier 1 level at any capital market in any jurisdiction. So they are very, very interested in to consider with us. From their perspective, from their preparer perspective, we further understood how people will realize, will understand what we ask them to do or not ask them to do. Actually, in practice, there are lots of considering the complexity in real economy, in real world. Sometimes people cannot always understand the standards, the requirements of standards, and the principles in standards in the way we expect them to do. And it also helps us to get an opportunity to listen to them and consider, if we get further opportunity, whether we need to do some improvement to the current standards. And but most I highly if you are interested in to understand the ISSB standards very deeply, or you are asking for further guidance provided by ISSB, I would like to recommend you to read all of the agenda paper of TAG meeting. That's that's easy to understand, very understandable. Not so technical, but really focus on how to understand some technical requirements of ISSB standards.
So perhaps with that, thank you, Bing. We can open again for any questions, I think, from the room. IFRS 2, IFRS 1. Again, we've tried to condense, both standards in sort of a recap. But again, feel free to let us know if you have any questions or observations. I don't think there are any questions, so. I think we have, if we move to the next session, I think we wanted to bring the investor perspectives again on S1 and S2 on our future areas of work. So not sure whether our colleagues can connect the external guest.
Thank you, the ISSB team. The next session will delve into the perspective of investors on S1 and S2 information and our future work in this area. May I now invite the ISSB Investor Advisory Group who will join us virtually to share their insights. Welcome.
Thank you. Good afternoon. Just to check whether the audience in the room and on the line can hear me and see me clearly. Okay, good. Thank you. So good afternoon from Singapore. Thank you for the invitation. So my name is Trista Chen. I lead LGIM's investment stewardship activity in Asia ex-Japan. And LGIM has been a member in the investor advisory group. So today I have the pleasure to share with you collectively and on behalf of my organization with respect to some of the investors' expectation when it comes to ISSB. Let me quickly share my screen. Okay. Great. So LGIM has been a member supporting ISSB for a very long time. And part of the reason that we think this is important is pretty much captured in the presentation that I will share with you in the next 20 and 30 minutes. And at the back of that, you actually can see some of the publication that we have shared in a blog called To ISSB or No ISSB that our team has recently published. So I would like to walk through some of the considerations that today, mostly coming from the investor's perspective, and also in our conversation with our investee companies, why we think this is important. And before I start, I think it's quite important to share what kind of organization the LGIM is. So Legal & General Investment Management is the asset management division of the Legal & General Group. We are a large global investors with around 1.4 trillion of dollars of asset under management. So essentially, we have exposures to the global market from both the equity and fixed income perspective. And that means that when we look at our expectation from our invested companies, we take the view of universal owner. So what we mean that is that we're not only looking at driving the performance of specific companies or fund, but essentially at the universe that we're exposed to, and that is with a scale of close to 20,000 companies globally. So with that in mind, we do think standard settings like ISSB is important that are reflected in three perspectives. First of all, it helps us in understanding the financial material topics of climate and broader sustainability information that are essential for our capital allocation. And this can be illustrated in a number of ways that may it be a responsible investment strategy or just in coming from the perspective of how companies' performance with respect to climate or the topic like nature or human capital, human rights that's up and coming in aligning with our fiduciary duty on behalf of clients that we're managing the money. So there are a number of mechanisms that LGIM has been taken into account in terms of integrating ESG factors into our capital allocation. And a lot of those data will be coming from disclosure that the companies that we invest in disclosing using framework like ISSB. Then the second point is that increasingly, not just for ourselves, but globally, we do have increasing expectation from disclosure to both our clients and also to the regulators. And this is putting a much more pressure and also the expectation for us when it comes to the quality of reporting that is highly depending on the data that our invested companies disclose. And because our scale and the operation that we will be looking at global consistent standard when it comes to disclosure. And again, this is where we see that ISSB adoption is able to provide. And lastly, the standardization with the greater alignment between the non-financial data and financial information are critical. And I hear the presentation earlier in sharing the expectation from the S1 and S2 perspective. And I think this is in particular important in aligning a more traditional financial thinking perspective, and also how do we link to the non-financial data that are joining the dots particularly. And ultimately, we do consider that the benefit of ISSB is not only from the investor's perspective, although the sense that is setting on behalf of the investors, but we do see there are a number of benefits that companies can consider when it comes to using ISSB. So firstly, adoption of a standard like ISSB will be able to improve your operational efficiency for disclosure. That means that you are looking at one-stop disclosure that check all the boxes to meeting not just the customers, the regulators, but also the investor expectations, streamlining the disclosure process. And also, this is more importantly, that at the executive level, we do consider using ISSB standard is able to support companies in identifying what would be material, or I see the early conversation is using the term of the relevant risks and opportunities. This is very critical when it comes to the Asian market, in my opinion, because the disclosure of the report on sustainability, although is important, but then if there is overemphasis on disclosure and disjoint from using the information to be integrated into the company strategy and also decision making, and fundamentally, that's not the direction that we want to see. Hence, using ISSB is able to assist companies at the executive level and also the board level in understanding certain business decision and strategies taking the integrated sustainability into those processes. And next is that using the standard will be able to help to inform and integrate those issues into a much more tactical and practical decision making at the annual planning, budget planning. This can be down to the capex, OPEX allocation, or this can be business decision over an M&A acquisition or divestment of non-core asset. So how is the company's financial long-term resilience integrating business sustainability issues is the direction that we see that ISSB is able to provide. And ultimately, in the interest of the company's boards, using ISSB is able to embrace the adoption of standard to ensure that that means your shareholders and also your board members have a consistent and comparable disclosures of material risk. Because from the investor's perspective, our engagement conversation is often at the board level because the board should represent the investors in the communication and also the management of the company's executive level. So that means that we are bringing both the board, also the companies and the investors in a consistent understanding when it comes to sustainability. So with the development of ISSB, actually that is not just an alphabet soup that you hear in the sustainability world. Why we see the building block approach has been fundamentally important for us as investors is that it provides us a global baseline in establishing a consistent, comparable, and reliable set of disclosure standards that can be used at worldwide. Now, like I mentioned, that LGM is investor with exposure globally, all the major markets, up to around 20,000 companies. So when we compare the performance, that we do want to have the data using the same set of expectation and methodology that we will be able to compare across the board. So ISSB does provide us the global baseline in order to achieve that target. And secondly, because we do understand there are different jurisdictions when it comes to maturity difference and also very specific local concept that should take into consideration. So the building block approach will allow individual countries and also different regions to add on the additional requirement to reflect your local needs and priorities. And we do see this is quite evidently demonstrated in the regional and also certain countries consultation process just in the last half a year or 1 year in reflecting some of those variations into how sustainability disclosure in aligning with ISSB's S1, S2 are actually reflected in the local market. So we take that as a very positive approach. And lastly, like I mentioned, that much broader focus on stakeholders, facilitating reporting on all sustainability matters that will impact not just on the finance, but also the people, the environment, and economy. So we're not just talking about doing good, but and also that how is this affecting financially, which is what investors cares in the long term. So we're not looking just at financial return, but financial return sustainably and more resilient at the company level. One of the contexts that we do hear quite a lot and discuss is the different type of the materiality when it comes from financial materiality or what we call the investor-focused materiality versus the impact materiality. So we thought that this is something that worth explaining a little bit. So a well-functioning financial system will require identification and the response to systematic market-wide risk, including those such as climate change and the nature loss. The contributions of all individuals and economic actors to the underlying cause of such risk cannot be ignored if we are to mitigate them. So historically, and also based on the existing financial system, there are much more focus on the financial materiality, which is what we consider what we call the outside-in view. But this is basically what it means is that how climate and other sustainability topics can affect the company's financial performance. But the concept of double materialities, which is coming from an inside view, inside out perspective, is also emphasizing on what would be the impacts that a company's activity would create that have the reverse impact on the society or the planet as a whole. So double materiality essentially broadens the traditional view of materiality by considering not just how environmental, social, and governance issues impact on a company financially, but also how the company's operation has the reverse impact, which is why we call the impact materiality. This is why we do see this is a stage approach coming from the investors' global perspective and universal owner perspective that we do want to see that the development from a currently much more investor-focused materiality perspective to add on the reflection of the impact materiality with the other dimension. And while we do recognize that there is the maturity in different markets that we are facing, but we would highly encourage companies to start considering this, because we will not be able to look into the topic of sustainability in isolation. Those are very much closely linking to with the way the operation helps. And looking into how is this translated in ISSB context, we do see that ISSB standards improve the coherence between sustainability disclosure and also the financial reporting, and where this remains to be a disconnect. So this starting from not only using ISSB as the disclosure standard for sustainability, but essentially based on the work that, for example, TCFD has been doing in the last couple of years, it creates a great foundation in understanding of how we link the topic of climate and now evolve into nature and broader sustainability concepts into the reporting reflecting the consideration of finance under the banner of the International Financial Reporting Standard, basically IFRS. So IFRS very much supports the continued need for the greater alignment between the two. So this is when we are thinking from the investor's perspective, how is your operation with the long-term financial implication integrating sustainability? And also from the lens of the impact of how your operation has the impact on the greater society and also the community, the climate, or the Mother Earth, etc. So reporting on those topics will be able to provide us a much more relatable and then also comparable in trying to estimate what will be the likely creatable and also erodible enterprise value in the short and medium longer term. And also ISSB facilitate a multiple stakeholder kind of mindset when it comes to sustainability reporting. So it is not just focusing on a single matrix perspective, but also very much reflected on the significant positive or potential negative impacts on the people, environment, and the economy, as we spoke about. One of the key reason where we consider ISSB framework is important and credible and also critical from the investor's perspective is that it has taken a very much convergent approach linking with the other framework that you see on the screen that may have been much more commonly adopted or understood in the Asian market, also the global lens. So I know a number of you on the line should be quite familiar with the Global Reporting Standard, the GRI, which has been one of the core sustainability standard when it comes to reporting in the region. The other one we also commonly see is the Integrated Reporting, the IR. So what is the beauty of IFRS in creating the ISSB S1 and S2 is the fully consideration with the existing framework at both the global level and also in the regional level in making this much more interoperable. That means that we are able to have the standard at a global level that's connecting with each other. And a lot of the focus of ISSB is also building on the building blocks of the other framework like TCFD, like I mentioned, that has been developed. And another feature of the ISSB is its close relationship and integration of the SASB standard, which is the sustainability standard board that is thinking of how it is sectoral ESG topics in identifying the most relevant and material topics that companies should report on. So all of those are where we see why ISSB is a handy tool, not just from the company's investors' perspective, but also from a company's perspective. And looking forward, likely you have heard that IFRS has already announced the next stage of the work that they will focus on in developing what hopefully we will see at S3 and S4 standard, and also integrating from the other framework that we see increasingly to be relevant. So the topics will include a very much nature-focused lens, what we call biodiversity ecosystem and ecosystem service, the Bs. And this is closely linked to the standard of TNFD, the Task Force of Nature Financial Disclosure, a standard framework that is very similar to what you may be more familiar with TCFD, but really looking from the nature's perspective, how are we able to navigate a climate topic in the consideration was nature, because without that, we probably wouldn't be able to address the climate crisis and climate situation. The next topic is the human capital. So we know that there are a lot of conversation that has been going on within the investor advisory group in terms of what would be the key indicators and indexes when we talk about the human capital disclosure. And there's also, again, a great synergy back to GRI standard, SASB standard, that some of those topics has been already been featured. So hopefully with the convergence of the further standard development that we will see again, the alignments of the existing framework to be consolidated and then merged together when we addressed the disclosure on sustainability topics, circle back to ISSB. So those are some of the developments that we thought is worth to highlight on the importance of why ISSB is relevant and why we do see that should be the go-to standard from the investor's perspective. Moving forward, from the early stage, as I mentioned, that LGIM has been very supportive with the ISSB standard as a member of the advisory group, through which that we have been providing inputs and feedback on the draft standard and also the previous and ongoing research projects. We have been since calling on policymakers and regulators around the globe for full adoption, and most recently in our response in different consultations in the jurisdiction in Asia, including Japan, Korea, Hong Kong, Malaysia, Singapore, etc. So we do see communication is the key when it comes to the dialogue between investee companies and investors and also the regulators in order to improve the access to global key capital markets. Because like I mentioned at the opening that it is inevitably the situation that all type of investors have integrated or will only integrate further of sustainability topics into our capital allocation. So how can we unlock and make the communication clear from both sides of what we expect from companies? How do we use the data? What we use the data for? And then also in return for companies to understand that there is a potential reward process that they can see should they improve their disclosure of, and although that ESG is not the only thing that we're looking after, but that is the key criteria that we consider in the capital allocation. So ISSB adoption is a great opportunity for us to streamline this communication and then also to improve the communications, which means that we are speaking on the same wavelength, using the same terminology, the same framework in reducing the frictions or the ambiguities of the ask and understanding from both sides, right? So this is why we see ISSB again is help to reduce the barriers for investors like ourselves at a global landscape when we value securities and both the equity side and also the fixed income side. And then also it has great potential benefits for long-term across the boundary investments, which is what we want to see with more companies in the Asian emerging market to have the opportunity to access to international capital market in the future. So this is where a building block and an opportunity for us to unlock this should further development that we see on top of very encouraging adoptions in the region already. So we do encourage companies and regulators further take up with the ISSB adoption. So far globally, there are 20 jurisdictions accounting for nearly 55% of global GDP and more than 40% of global market capitalization that has adopted. This is a significant step that we do need to further step up in order for ISSB to become the mainstream and hopefully to be reflected in the legal and regulatory framework. And for us as investors, we are also playing a key role in our communication engagement with local regulators. So from LGIM side that we have been actively engaging with different regulators from a stock exchange perspective and different ministries in sharing our expectations of this adoption, not just for the climate, but also nature with regard to early, faster consideration of TNFD, and then also with respect to integrating ISSB into the wider accounting standard. So just to wrap up this chapter, ultimately, the next step is that we do hope the regulator can act with pace with adoption to ISSB standard, like I mentioned, and more importantly, has a clear implementation roadmap of how this can be executed, because having a commitment, a time scale that from this time onward that this standard will be applied is important, but it doesn't solve the problem, both from the company's perspective and also the investor's perspective of knowing how good looks like once the implementation days kick off, right? So we do see that this comes down to a reliable and detailed implementation roadmap in terms of how we see this is visible, so that we have a better confidence in understanding with the implementation, this will be effective. And ultimately, with regard to the ASEAN countries, we do see there's a need to prioritize large cap companies. ASEAN economy plays an already, if not increasing, significant role in the global trade in the supply chain. So we do see the need to focus on the large cap companies first, and then leveraging the procurement power and then also the sourcing ability to unlock that understanding of sustainability when it comes to SMEs. And this is reflected in my next point when it comes to expectation on invested companies. We do see and hear quite a bit from the companies when we speak to, they do feel there is a burden of reporting, not just for the scope 1 and 2 for the greenhouse gas emission, but also scope 3. But we do consider the need to have the scope 3 in particular to be considered, because without the scope 3 to be disclosed at the different category, we will not be able to have a holistic understanding of how companies are managing the climate change and also the emission reduction, and also opportunity to optimize the process from a supply chain process. And like I mentioned, that Southeast Asia ASEAN economy plays a critical role in a global supply chain. So only would companies from the large cap perspective to enhance your scope 3 disclosure, we will be able to see the opportunity holistically at a global level when it comes to decarbonization measure, so that at a system-wise that we know what would be the adequate step that needs to be taken, and also avoid potential blind spot that we are not able to see due to the lack of transparency. And aside from the scope 3 disclosure, we also encourage company to consider SASB standard and identifying what would be a sectorial approach. And this is that in some of the conversations, we hear the desire and also the hesitation. And I want to point out, at least from my personal experience, working both in the public sector and in the private sector, that SASB is a great toolkit. And their website has a lot of existing guidance that it helps you to navigate and get started with the sustainability strategy discussion, implementation, and ultimate disclosure journey. Because companies hold that responsibility and accountability when it comes to sustainability. And this is not just from what you disclose, but also why do you consider those topics are essential and relevant to your operation with respect to what the risks are and opportunity. And SASB is exactly created with that kind of understanding of helping companies from the sectoral perspective in providing the guidance in navigating. You can take it as a screening process or guiding in order to navigate so many different sustainability topics that you may focus on. And last but not the least, with the climate conversation that we see not just in Asia, but also globally, there's a shift from focusing only on climate commitment to demonstrating of a credible transition plan. And this is irrelevant to countries whether there is a net zero 2050 commitment or not, but ultimately holding company accountable in terms of a governance perspective that they will be able to deliver the climate commitment they hold. And so how is this translated and communicated in a credible transition plan with short, medium, long-term target, mostly focusing on short and medium term, and then also align with the global expectation, national perspective, and also investors ask, is where we see the shift of the climate dialogue. Lastly, like I mentioned previously, there are a great deal focus for us, at least when it comes to nature, human capital. To start with, while we recognize and very much understand company feels the pressure on discussion of nature, of climate at this point, however, we do see this is actually an opportunity and shortcut should companies start to think about what is the implication and also their reliance on nature while they look at climate, because those things cannot be separated, right? So let's take the chance and really utilizing the opportunity. May you be at the beginning of your climate journey, sustainability journey, or you are in the mid of refreshing your strategy already and integrating nature into your thinking. Okay, so before I wrap up, I do get asked this question quite a bit with regard to, since investors, you do ask us so much about being transparent and disclose data. Can you at least tell us how you use that? So I'm just going to use 5 minutes very quickly to share that how within LGIM that we are transparent and using data driven in our engagement activity and also our capital allocation. And those information are available on our website if in case you want to explore further. So LGIM has been publishing a lot of the expectation with regard to our thematic coverage. And when we say themes, this can be translated into topics like climate, nature, people, governance, health, and digitization. And aside from the publication of our expectation, we have been developing and maturing what we call the LGIM ESG score over the last 5 or 6 years. And now this has developed into a 34 data points of information based on companies' disclosure that we draw from 5 global data providers. And because our role as a large global investors, the LGIM ESG score has been designed from a geography and sector agnostic perspective that we are able to compare performance across the board. So currently there are 34 topics sit under 4 pillars of environment, social, governance, and transparency. And you can see on the screens, those are all the data points that we gather from available information from the company's disclosures. And a part of the ESG score is used for the engagement conversations with the companies, and then also being applied into some of the investment strategy, including our index solution into tilting. What we mean by tilting is that, so for certain mandates that our client, for example, that has the focus on rewarding company with greater alignment with green revenue. That's the topic 4 on the screen on the left-hand side, that we will see based on the company's disclosure on green revenue, should they have a higher performance comparing to the benchmark, then we will tilt further and more capital allocation in rewarding the companies on that. And equivalently, we will also penalize the companies for the disclosure that is not meeting our expectation. And all the disclosures of the LGIM ESG score of the large companies globally, and so far we do disclose up to around 16,000 companies' performance on our website. So you will be able to see how your own disclosure, should you fall into certain large indexes, and also some of your peers' performance accessing our website. And again, from the spirit of transparency, the methodology is also disclosed. So you will be able to see how we set up the minimum expectation and which data provider that we use to draw those information from. Right? So this is just to provide a snapshot of how the wide range of ESG disclosure has been integrated into our engagement and also scoring. The next one is what we in-house call our active ESG view. So this is a proprietary tool that we collate and synthesize all the ESG related data from the external data provider and also our internal proprietary inputs that put into analysis. So on the left-hand side is a screenshot of how the LGIM ESG Active View scorecard can look like. So you can see that there's a dial and also the color coding system with respect to how strong we see the company's ESG disclosure and performances is. And this is very much used in our active strategy, and mostly from a fixed income perspective in terms of capital allocation. And every quarter, for example, we're going through the exercise now that should certain companies' ESG score is very low, where the research analysts and then the PM do feel the desire to invest in this company, then we will need to go through a rebuttal system into discussing whether there is the justification of certain capital allocation should the company's ESG performance not meeting our investment strategy. So this is again using both our internal proprietary methodology and also external data providers in combining all the available information through your disclosure for us to make investment decision and also capital allocation. And lastly, before I wrap up, aside from the LGIM ESG score and the active ESG review, we also have what we call the Climate Impact Pledge score. So the Climate Impact Pledge is a campaign that we've been rolling out as we speak for the 9th consecutive year. So the Climate Impact Pledge has two folds. One is the quantitative scoring based on the public disclosure, drawing companies' climate data in evaluating up to 5,000 companies' disclosure. Then the second one is a qualitative direct engagement where we have direct conversation engagement with some of the down mover companies and up to 100 with respect to a set of climate expectation. And ultimately, when it comes to quantitative assessment, it is based on our 20 critical climate sector guide that we publish online. And then the methodology is also designed mirroring the TCFD 5 pillar. So as you can see, it has topics like governance, scenario analysis, metric and targets, risk and opportunity, and strategy. And the company's disclosure is being evaluated on an annual basis and updated. So the outcome of that is that, first of all, companies have a reasonable, clear understanding of how their climate disclosure is aligned with our expectation. We provide the scoring and also traffic light system, and giving the company's perspective. We also use the arrow as indicated on the screen with respect to whether there's a change from the last period and what the data provider is coming from for this data. And the secondly is that we are able to benchmark a specific company's performance with respect to their sector and also their geography, with whether it's a global market or emerging market we see, and compare the performance across the board. And ultimately, the Climate Impact Pledge score, similar to the LGIM ESG score, is able to be integrated into certain responsible investment strategy, and also linking to the consequence that we may vote against certain chair and director re-election or election should they not meet our minimum expectation. And then the qualitative engagement with the 100 company may ultimately lead to divestment. But when we say divestment, it's not divestment across the board, but the specific fund that apply the LGIM ESG score. So to wrap up, want to give you a snapshot of how we as large investors has been actively using the data that you disclose into our engagement and investment strategy. And that's why we highly encourage all the companies in global major markets to start using ISSB so that we are able to achieve a global consistent way of disclosure, and then also global consistent way of standardization into our assessment and capital allocation. So I'm going to pause here and take any questions. Thank you.
Thank you very much, Trista, for the fantastic presentation. We really enjoyed you walking us through what are your considerations as an investor, how you're actually seeing this journey, and how you think the ISSB standards can indeed support providing information to investors in a way that you can actually build all of that into the different modules that you are developing. I wanted to open up for questions, I think, from the audience. But again, thank you very much, Trista. Any questions, please, for Trista? I think you should have, I think, a microphone on your table. So please just identify yourself, your jurisdiction, so that you can provide a bit of context, I think, for Trista.
Hello, thank you. Hi, I'm Christine from the US ASEAN Business Council. It's not really so much of a query, it's just a request for slides. I think over here we had a bit of technical difficulty, so we would appreciate if you could share the slides with us afterwards. Thank you.
I can share the slide with the organizer. Thank you. Apology for the tech difficulty.
Are there any other questions, comments, observations? I think, Krista, the slides were showing a bit blurry on the screen, but I think thank you very much for offering to share that, I think, with the group. I'm not sure if I see any other hands up. not sure whether there are any questions from our online participants. If not, perhaps a couple of reactions, at least from us, and I'm asking here my ISSB colleagues to chip in as necessary. I think it is very clear from what you've mentioned that definitely you need information beyond climate and this stage. And of course, you have highlighted the fact that the ISSB will be conducting work on nature-related biodiversity, ecosystems, as well as human capital. But of course, until we develop S3 or S4, if we get there, we certainly plan to engage with stakeholders so that informs, I think, our work going forward. But I think in the interim, companies will be able to rely on SASB standards to produce a part of that information. So I think that is really helpful. And you made some interesting remarks as well on the outside in, inside out, and maybe Bing wants to react.
Hi, Terence. Sorry, Trista. Trista, thank you so much for I really appreciate your thoughtful insights and shared just now, and I appreciate a lot of deep diving in specific technical issues. I really want to share some points of maybe it's I cannot say I'm representing the view of the board or anyway, but sounds like a consensus or common understanding on some specific points you mentioned just now. When we're talking about double materiality, when we are asked as very frequently whether you are moving towards double materiality, I think the answer is depends. Depends on how you define double materiality is. And Trista, actually, you are the method you are using to distinct the financial materiality or investor materiality and impact materiality. Actually, that's used by ESRS, not by the ISSB standards, particularly IFRS 1. Because according to the ESRS, they defined the financial material matters as those who are material from the perspective outside in. And on the contrary, they define the impact material matters like those who are material from a perspective inside out. That's not the way used by the IFRS 1, because let's check how we define the term of sustainability. The sustainability risks is actually rising from the process of value creating by reporting entity. That is the exchange of resources and relationships between the outside environment and stakeholders and the reporting entity itself. So the performance of sustainability related in the whole value chain related to the reporting entity is important to investors. For example, scope 3, as you mentioned, is really important. It should be important for regulators to asking for mandatory disclosure on scope 3, but we are not facilitated scope 3 disclosure for providing a global picture on GHG emission. No, we are facilitated investors when they try to value the specific reporting entity from the perspective of the whole sustainability risks in their value chain. That's the way we define sustainability. So there's no the outside in or inside out process. All of this, we use term like interdependency between the outside environment and the reporting entity and the interactions between them. So we avoid to use term like financial materiality or financial material. We prefer in some informal scenario use the term investor material or investor materiality. That's why financial materiality does not equal to the investor materiality. Also, we don't use impact materiality. But how we understand the impact or impact materiality from our perspective, because we are focusing on providing information for investors' decision. And investors, millions of them, thousands of them, they are different. But as a whole, investors must rely on information published to them by reporting entity without any tailored amendments or tailored design. They have no rights to get that. They have to get for public, for everybody. So as a whole, maybe once one investor is different from another investor, they are focusing on something slightly or severely different. But as a whole, we try to describe a picture what investor asking for, just like our sister body, IASB are doing in citing their accounting standards of IFRS Foundation. So that's the double materiality and impact materiality. Our line is we are not against impact materiality. We are not against impact material. We are not against impact disclosure. Because like thanks to Trista's introduction, in the global baseline, as a global baseline, we are working for investors. And in our building block approach, you will find an additional building block. That means impact disclosure for other stakeholders can be provided, can be disclosed in the reporting entity with a compliance statement for they are applying our standards. But the condition is if the impact disclosure shall not obscure the material information for investors, and both of these two parts of disclosure shall be distinct disclosed separately. If you are interested in that, you can refer to the paragraph 74 in the basis for conclusion of IFRS 1. We raised some examples how to achieve this distinct disclosure. So no obscure and distinct disclosure. That's the condition to consider to include the impact information or impact material information in the report. Jonathan, thank you.
Yeah, thanks, Ming. Maybe I can just add, indeed, the clarification I should have added. If you recall, there was a slide of a triangle with a global baseline, jurisdictional consideration, and multiple stakeholder. I think what being illustrated is that ISB provides a global foundation of a consistent framework and understanding. From the investor side, indeed that I'm only speaking within my own organization, but there are so many different international domestic investors. And also not to forget that even though within the same investors, because of the investment strategy is different, the need to consider ESG into integrated or the capital allocation will be different. But that is the job that we are doing on behalf of client. And what we need from you is to use on ISSB to provide us the data that is coming from your understanding of your identified risk, the most relevance and opportunity perspective. And in a way, I know there's a lot of effort focusing on the disclosure part, working with your third party consultancy or companies to provide a very comprehensive and also beautifully pleased to read report. But ultimately, there are a lot of things that we're focusing on to do with the data quality, and also recognizing some of data is not perfect. We're not asking for perfect disclosure in a lot of things, especially for topics when it comes to Scope 3. We recognize that this is a fast developing topic, especially when it comes to your supply chain within the SME. But we are asking for the disclosure to your best availability and also possibility. And where there is assumptions or limitations, please frame that. But then on the wait and see kind of approach that we see quite a bit in the region is actually in the short term, medium term, long term quite harmful, right? And also there's the fears of how is my data going to be compared with my peers? I can't answer that until you actually start disclosing, right? So this is the chicken and egg situation that we do encourage company to use ISSB to provide that global foundation of disclosure. And from there, you will hear different investors will come to you and ask for different specific. And the LGIM ESG score that I showed you, by and large, those 34 topics, except maybe a handful, have been our expectation 5 years ago. So this is where we may be a bit more forward-looking, but this will evolve as the topic matures, right? So that's why it is a continuously improvement and development that we are all in this together, and hence ISSB provides that building block and able to work on that. And like I mentioned, that we do recognize the maturity difference, in particular in the region, but then it's a two-way conversation. We want to hear from the investee companies rather than commenting, we can't do that because we're not ready. And hence, I just want to provide additional comments and highlights based on what being mentioned and acknowledging the context that he shared from ISSB perspective. Thank you.
Thank you very much, Teresa. I think that's an interesting reflection, that you're actually using data and that indeed steps being made to progress information will already be an added value in the way you actually build information that goes into your 34 data points ESG score. I think that's a good counterbalance again to the concerns we hear sometimes from regulators, from companies as well, that the information may not be perfect at the beginning. But I think those gradual improvements already deliver information that's useful for you to be able to get better data, at least on those 34 data points, right?
Yes, thank you.
So I think with this, Trista, I'm not sure there are any other comments, but again, just thank you very much on behalf of us all. I think an excellent presentation, really insightful, and again, our appreciation. Thank you very much, Trista.
Thank you. Have a great training. Yeah, thank you. Bye.
Thank you very much for your invaluable sharing. Moving on to our third session, we'll explore on how the Sustainability Accounting Standards Board (SASB) standards can be used to meet the requirements of IFRS S1. And please, the ISSB team to share the insights to address this topic.
Thank you very much. So I think we've heard from Trista that, of course, they're interested in topics beyond climate. As I mentioned, we've been mentioning before, we have set IFRS 2 or climate-related standards, but I think there are provisions in IFRS S1 actually pointing out two sources of guidance that will be able to support the implementation of IFRS S1 so that there is information that can be provided on all sustainability-related risks and opportunities in a way that will be information meaningful and material to investors. So why, and I think when we're looking into both IFRS S1 and IFRS S2, we're looking why industry-specific information is a key pillar in ISSB-related standards. And I think, of course, if sustainability-related risks and opportunities vary by industry, it's very different to compare the sustainability-related risks of a financial institution, of a bank, from, for instance, an airline. I think those inherently are different. There will be elements of commonality, but there are specific aspects that do vary. And we've heard, I think, from Trista that they do have a sector agnostic approach, and they certainly want to be able to compare companies on a set of, let's say, cross-industry metrics and put them all aligned. We also understand there are other investors that actually track industry portfolios, and they're interested in being able to compare different companies operating within the same industries, and actually even between companies operating in the same industries in different jurisdictions. So we believe this information, and this has been consistently what we've heard as part of our engagement with different stakeholders, investors in particular, that this was information that they really wanted to see in ISSB standards. Again, with respect to IFRS S2, We do have the industry-based guidance inspired by SASB standards, and we have SASB standards as a key source of guidance to identify sustainability-related risks and opportunities. So what do ISSB standards say about the role that SASB standards play in the identification of risks and opportunities? Again, IFRS S1 notes that an entity shall refer and consider SASB standards, both for the identification of sustainability-related risks and opportunities, but also for the identification of information to disclose about those risks and opportunities, and for the determination of what are appropriate suitable metrics to provide that information. Again, even though our standards do require companies to consider SASB standards, an entity may determine that the disclosure topics, the associated metrics, are not applicable in light of its own circumstances. So this is a decision, this is a call made by entities. A question we have received frequently from regulators is, how can we tell that a company has actually referred and considered SASB standards and has determined that the metrics are not applicable? Again, this is an assumption, judgment that is inherent to ISSB standards, and we would expect those assumptions, those judgments to be properly documented, I think, by the company. The company doesn't need to go through the process of having to prove that they have considered and referred to, but we expect that through the assurance process, through the internal audit, through the quality controls, that will emerge as part of the process. So SASB standards, as you are aware, have been around for some time now as part of the IFRS Foundation efforts to consolidate some existing frameworks into our overall architecture. We incorporated the Value Reporting Foundation, which again, brought together SASB standards and the integrated report. SASB standards have been, for a period of time, very much the focus of investors, and many companies have actually embraced SASB standards because they understood that they were providing relevant information for investors. So they have been informed by the market. The market has had a key role in defining SASB standards. We do have evidence from our engagement with investors and regulators that they are decision useful, and it's also cost effective if you're able to identify the industry in which you operate, to be able to have guidance that allows you to identify what may be material for investors in the industry I operate. We can move to the next slide. Again, just to snapshot of how many more organizations are actually using SASB standards since 2022. So we're almost touching 4,000 new organizations accessing the information. And again, if you navigate through our website, you can see which are the reporters that actually rely on SASB standards to provide information about sustainability-related risks and opportunities. So what is really the result of all of this? I'll get later on into the 77 industry-specific standards, but one thing that is particularly relevant in SASB standards is that they do identify disclosure topics for each industry. So that is fundamental for a preparer, for an entity to be able to look into and have reference points as to what are disclosure topics that are likely to be material for an investor. And of course, the decision is, should be done on the basis of the business model. What's really applicable in light of what's the business that the company is running. On top of the disclosure topics, SASB standards also come with a set of metrics that allow measuring performance on each of the topics. And as well, some technical protocols to help aid how data is being collected and a number of activity metrics. So SASB standards do provide the foundations in the absence of a specific thematic ISSB standard. Until we do have S3, S4, S5, SASB standards can actually fulfill a role in doing so. And as I was explaining throughout the week, we actually plan to use SASB standards or exercise to enhance SASB standards to inform our future area of works around bees, nature, and human capital. We can move to the next one. Again, so SASB standards are based on the sustainable industry classification industry 6. It does incorporate 11 sectors. And again, as I mentioned before, 77 different industries. So 6 were actually established to help develop SASB standards in a way that information could be meaningful. The 77 industries are grouped on around 11 different sectors. I won't get into them, but you can see them on the screen. And again, the ISSB has already determined that 6 is the best way to facilitate investors' ability to analyze and compare companies. I think that level of detail does support the level of information that they have been using for. And again, we plan to leverage and rely on 6 as we consider enhancements to SASB standards as part of our future work. We can move to the next slide. So again, these are the 77 different industries that feature in SASB standards organized by the 11 different sectors. So I think we've mentioned already that as we prioritize our work for the next 2 years, and as we think about enhancing SASB standards, we'll be putting a particular focus on, rather than conducting a holistic review of the 77 industries as a whole, we'll put our focus on 3 sectors. One on extractive and mineral processing industries. So you can see, maybe it's too small to see on the screen, but mainly covering oil and gas, metals and mining, and construction materials. Another sector that we will be looking to prioritize as we enhance SASB standards is food and beverage. And I'm sure Jeff was sitting with me yesterday on the, I'm sure this is a sector I'm sure you're pretty familiar with. Then again, the other sector that we will be looking to update in our next set, it's on electrical power. So those are the industries and our focus for the next focus of work. Again, SASB standards are available. You can access them through our website. So again, we invite you to take a look to all of those. So very much like what Krista had explored, there are a number of topics that feature in SASB standards, a whole universe of sustainability issues that can help actually try to understand what are the topics that should be brought to the attention, I think, of investors. You'll see 5 different areas here and a number of more detailed topics. Some of them actually will be the focus of our work, such as labor practices, employee engagement, and so on, that will feature in our future areas of work. We can move to the next slide, Bing. So why are SASB standards information companies can put together using SASB standards relevant for investors? We've put some example here, and we've tried to connect what are the different disclosure topics with what are the potential implications in terms of financial performance. And again, here, this is just an illustration. We are not suggesting here that eventually there will be a direct effect on financial reporting, but these are areas of connectivity that potentially over time may have implications and may affect performance and prospects. So again, when we look into food safety, for instance, demand for products and services that may have an impact on revenue over time, or in relation to community relations in the metals and mining industry, the social license to operate, which may have also implications in terms of the cost of capital. So again, these are investor informed and decision useful. We can move forward. I think I've already probably covered why we plan to enhance SASB standards. Again, those will be fundamental as we help companies navigate through the initial implementation of IFRS S1 in the absence of other standards. They will be instrumental in supporting our work on the different research projects. I think we're probably stuck on that slide. Not sure whether we may have run out of the battery. But again, one more slide only. We can move to the next one. Yeah. And I think we're reaching the end of the presentation. I would like to leave some room again for questions. So summarizing, how can SASB standards underpin how companies can implement the requirements in IFRS S1 and IFRS S2? I think as a first starting point, companies should identify the relevant industries in which they operate. And certainly many companies may have several industries that will be relevant for them. Once company has identified the relevant industries, I think as the next step, they should probably identify which are the relevant disclosure topics. As we've mentioned before, each industry includes this. Companies may need to look to a few industry-specific standards in order to be able to determine which are the relevant disclosure topics in light of their specific circumstances and business model. Then we go down the process, if we progress with those considerations, identify which are the relevant metrics that can actually underpin information in light of the relevant topics. And finally, develop the disclosures if the company has determined that these are topics, metrics, and information that's material to investors. So we think that in the absence of standards beyond IFRS S2, SASB standards provide a good basis for developing information in accordance with IFRS S1. And again, leaving aside the provisions in the standards, the requirements to consider SASB standards. When we are at the juncture where companies are trying to start in the process of taking steps to disclose, this is a useful source of information of capacity building to help companies navigate through their initial considerations. And again, as we've done in other areas, we have developed educational materials together with some webinars that can help companies get familiar with SASB standards if they haven't used them in the past as a way to support the implementation of IFRS S1. In the case of IFRS S2, as I mentioned before, we do have the industry-based guidance to support the industry-specific layer of disclosures that again is fundamental in ISSB standards. So before opening up, I don't know whether Yeling, Bing, you have any additional remarks you may want to make?
Thank you, Jonathan. Thank you. I'd like to flag the fact is in the reference to SASB standards as one of the external sources. SASB standards is our brand, but we have full IP to it, but it's not a product in accordance with ISSB Still Process Handbook. So it's not our product, but it's an external sources. In the reference in S1 to the SASB standards, we use that to help our preparers in two ways. The first one is to help them to identify their relevant sustainability related risks and opportunities, and two, to find the metrics used to be used to disclose their material information about the identified risks and opportunities. That's the two ways. And we have been continually improving or enhancing the quality and the international applicability of SASB metrics. The first step, we based on the related climate related metrics in SASB, we created the non-mandatory accompanying as a part of our accompanying guidance. It's a set of industry-specific metrics for climate related. That's over 200 metrics. And then the second round, we continually enhance the international applicability of SASB of other SASB metrics. rather other than climate related. It's also up to 200, more than 200, a bit more than 200 metrics, and published that at the end of last year. And now we are working on to enhance the third round to enhance the international applicability of SASB standards, particularly reconsideration on 6, the classification system 6, and some priority industry metrics, and both considering the interoperability with IFRS and the collaboration with the 2 research project in process of IWSB. And because in substance, SASB standards is quite simple, quite understandable to most of preparers and investors. Actually, on average, for each specific standards, SASB standards, it on average related to 5 or 6 industry topics, and only 14 metrics. Among the 14 metrics, on average, there are 70% of them are quantitative metrics. So it's very useful. Can I hand it over to you, Jonathan, for maybe your questions?
Any questions from the audience, including those joining us online?
No questions from the online.
So if not, we're probably ready to wrap up. Thanking you very much, I think, for your attention.
Thank you to all our speakers and participants for their valuable contributions to this training. To formally end today's afternoon session, may I please invite Ms. Abigail Ng, Monetary Authority of Singapore, MAS, as chair of the ACMF Working Group on Disclosure Standards, to close this session, please. Thank you.
Thank you and good afternoon, everybody. Just to say thanks, everybody, for some of you staying on for this session, and for the corporates that joined us. Thanks very much for spending the afternoon with us, though, you know, the lovely Mekong River and the wonderful sights and the food of Lao beckon soon. But just wanted to say again, thank you very much to ISSB, the Ping Leng, Jonathan, and Jia Ling for really coming down here and bringing us through a lot of the developments and answering all the questions, which I think it's really a really good opportunity for corporates to find out a little bit more. I wanted to also say thanks to Aluna and the LSCO team for all the hard work putting this training together, as well as for a lot of preparations that went into the 2 days of conference and meetings as well. I would want to say that I think more sessions like today's are going to be much needed in the months ahead. I think corporates around the region will be looking to ACMF and looking to ISSB to provide that support and those pathways. And we are grateful for the continued and ongoing relationship that ACMF has with the ISSB. As some of you may know, the ACMF and the ISSB have a protocol called an AID protocol, where we do have regular dialogues and feedback, where we take in views of ASEAN regulators and, of course, ASEAN corporates to work together with ISSB. In the beginning was to figure out the standards, and now it's what we need to have implementations and roadmaps. And of course, capacity building is a very big part of this protocol. I think I personally today found the segment that Trista from LGIM shared being exceptionally useful. I think it's always great to hear it from not your regulator or a standard setter, but to hear from your investor, right? What your investor wants. As we always say, sometimes, you know, money talks. Where are they going to put their money, and what do they look at? So I think at the end of the day, what Trista shared and what the ISSB team has shared is trying to explain and make it clearer the why and the what corporates like yourselves should be reporting when it comes to sustainability related risks and opportunities. As you've heard a few times today, without such material information, investors, other market participants, and even bankers and financiers are not going to be able to effectively assess and allocate funds. They aren't going to be able to accurately understand what your plans are. So I think there's one thing about doing it, but I think communicating it, especially when it's an investor or banker, I think that's probably key, right? If you have done something, but you don't communicate it effectively, they don't pick it up, they don't know, I think then actually it's a bit of a waste and a loss for the corporate. So I think with the ISSB standards now having been rolled out for some time and getting some traction across many jurisdictions, even in ASEAN, they are serving as a common global language for investors to look at and to understand what it means. I think it's a journey both for ourselves, corporates, as well as investors, which we will be partnering and walking with you in the next few years. The segment that we have today on the SASB standards, it's a new segment that we've added into training. And this is because of the recent developments that ISSB has explained and updated on. I think it's going to be really helpful for especially ASEAN corporates. A lot of our corporates are actually in specific sectors, so that guidance, I think, is going to be helpful. And we, at the end of the day, are all working together to promote high quality corporate sustainability related disclosures. And the aim of this is basically comparability, consistency, and reliability. I think doing this, and as ASEAN as a whole, the aim is to boost ASEAN corporates' access to the global capital markets and to support sustainable growth of the ASEAN capital markets, which is the ACMF goal and mission. So I again would appreciate if you all have any feedback or any questions. I'm sure ISSB will be happy to take them. But as always, please do participate in future training sessions. And once again, please do join me in thanking both the Lao SCO and ISSB.
Thank you very much, Ms. Abigail, for the nice remarks. Lastly, may I now invite Mr. Jonathan Bravo, Director of Regulatory Affairs, IFRS Foundation, to formally close the event. Please.
I'll hand over to my dear board member, Bing, to offer our closing remarks.
Thank you, Jonathan. Thank you, Madam Chair. Thank you, Abigail. Thank you so much, everyone. Not only for inviting me for the second time to attend the ACMF training and the conference and the chairs meeting, but also to share a couple of thoughts. I try to be short. The first point is I can make sure every comments from ASEAN countries, not only at this event, but also via other channels, will be very we pay full attention to them, to each of them. So I can give you an example. In this August, when we perform our outreach to get views from jurisdictional certain authorities on our two research projects, human capital and the bees, biodiversity, ecosystem services. We got 3 very high quality feedbacks from Singapore, Indonesia, and Thailand, from ASEAN countries. If you check our agenda paper, you will find lots of characteristics, concerns from these 3 countries, as well from other ASEAN countries in our staff paper from our website. So we will continue. We will try our efforts to be a good listener in this region and try to understand the challenges, concerns, and the other interests from stakeholders, not only preparers, but also regulators and investors. And we also appreciate deeply engagement, not only in the adoption, regulatory adoption and market engagement, but also technical engagement. When we are setting our standards, we'd like to listen to and really consider what you need and what you want and what you really cannot afford to, something like that. And that's the first point. The second one is the meeting today and the yesterday, the day before, is in these 3 days, looks very familiar to me. Some of you may note my background. I have very strong background of accounting standard setter. I spent my first 2 decades at Ministry of Finance, not only policymaker, but also the national standard setter. And the Chinese accounting standards start their journey towards substantially converted to now fully converted to the IFRS accounting standards since 2006. But actually, they start that job many years ahead of that. And I was so honored to have an opportunity to go through most of them. And what I hear now here in this beautiful country, in this great event of ASEAN, of ACMF, it sounds quite similar to what we tell the ISSB 20 years ago. That's what I call the pen or progress of growing. That's very in this progress. In this process, we understand each other, ISSB and ACMF, and we help each other, and we establish trust on each other. I really appreciate and enjoy this process. That's I want heartfelt. I want to express our heartfelt, Jonathan Burwell, Jialing, and myself, to everybody here, you guys, participants to this event, as well as the regulators in this morning, and our leadership here, ACMF and the Secretariat, and as well as our technical staff supporting this brilliant and Trista. Thank you so much, everyone. Have a nice day.
Thank you very much, Mr. Bingling, for the nice remarks to close this session. Ladies and gentlemen, this now concludes our training today. Thank you to our presenters who shared their valuable insights and expertise with us today. And also thank you all participants for your time and dedication. We hope that you found this event informative and inspiring. Before you leave, please enjoy some refreshment outside prior to your leave, and I wish you a safe journey home. And please do scan this QR code to give us a feedback on this training. Your feedback is invaluable to us รบกวนบรรดาท่านช่วยสแกน QR เพื่อประเมินการฝึกอบรมในครั้งนี้ด้วยขอบใจ Thank you and goodbye